Alrighty, so JPM weekly's pulled back below the moving averages. I don't really like the new highs and instant retracement, new highs and instant retracement, new highs and instant retracement, and each time it's just a very aggressive retracement. So not really liking this kind of uptrend. Daily can't really deduce much from it, but there is a nice level on the 60-minute chart, and I'm guessing I wanted to play that. Multiple consecutive candles sell off, 1, 2, 3, 4 consecutive candles sell off on the 60-minute chart. 5-minute has 1, 2, 3, 4. 15 only has one consecutive candle sell off, so that's not really something. Yeah, I definitely would not take this trade. Just too many, or not even too many stuff against me, but too few stuff with me. Pfizer, still the same situation as in previous episodes and weekly. Daily breaking out of this high, but now it's our second inside candle, both red, both starting off at and ending pretty much at the same place, so we're ranging. Not sure why I would want to take long at the bottom of it. Nothing indicating that it's gonna take off. No extension, no fake break, nothing. Yeah, just a skip. VST double bottom off of the moving averages, or not even off of, but it kind of like got through the moving averages and reclaimed them. Now we're somewhat sitting at resistance level. This was the initiation sell-off approximately, and this was a strong level at 96. Right now we are extended with 1, 2, 3, 4 consecutive candle extension to the upside into this resistance with a nice shooting star. Approximately 1 candle distance back to 9 EMA. 60-minute doesn't really display anything that's super nice for a short. It's got a tad bit of an extension, but I wouldn't really call this something that I want to short. So yeah, it's a skip for me. BA weekly breaking down from a very nice range. I love whenever a breakout happens and we have these inside candles. I think I previously mentioned that in the preceding video. Daily is also nicely ranging, and now at the lows with a 4-day range. Now we're at the lows. Unfortunately, we have a mini peak out here and here, which we have to get through, and I'm not sure what the opening candle was. It was this one right here. Okay, so we haven't had any blood in the water in that regard yet. So based on the way the 60 is positioned and the fact that we have two peak outs to the bottom side, I would like to get a nice intraday structure that we are gonna respond to the short side, which unfortunately I don't really see. The 60-minute is just not exact enough for me in this way, so this would have been a skip for me as well. VC very nicely breaking out of this weekly range. Unfortunately, we haven't dealt with this high yet. As I can see, I marked that as a target though. Oh shit, we actually have fake broken that high, and we are now back within this high and this high, so not really pretty. Oops. But we do have a very nice reverse head and shoulders set up for us here, so I'm liking that quite a lot. Maybe this was, oh yeah, so head and shoulders was up until this point, and this candle was the opening candle, so a fake break of the low here and then a reclaim was a very nice confirmation on a 60-minute chart. I absolutely love it. I wanted to play this level around here. I didn't think it would dump this hard, but it dumped very nicely. We got a nice separation from the 9 EMA, and we have put in a very clear hammer on top of this level, which was also super clean. I like it. So could have nagged an entry right around here, stop loss here. I actually entered later once we've reclaimed this level, which was basically the bottom of both shoulders. So this entry could have been one. This was good as well. Definitely worth risk to reward. entering here at my original place where I wanted to enter would have been chasing a bit. We already had 2 consecutive candles in that direction, and I would have needed a bigger pullback. We did end up rallying after that, but I think this trade was definitely solid. What I needed to look out for were the levels ahead of me. I think the daily and weekly catalysts were kind of solid, except for this, the fake break of this, but I think it doesn't really have as much power as the breakout from this range. And we had a super nice lower time frame confirmation as well. So the first 2 entries that I pointed out were just very clean and I think worth taking. First one even could have been 2R risk because of how nice it was and how big the risk reward was. It was approximately, let's just see. So this entry would have been, let's say I got a bit of slippage, approximately 75. Stop loss would have been around 63, so that would have been around 12 cents stop loss. And the target was 44, 40, let's say I front ran in 42, so 12 cents stop loss on an 80-cent-ish move, a bit less, 75 cents. That's approximately a 6R trade. So, pretty clean one in my opinion. Amazon. Okay, so I like this higher low round here. I think pullback's definitely valid. We are on a bit of an extended run here. Not super extended. We only have approximately 1.5 the candle distance from the 9 EMA. We have cleared these levels, so that's very pretty. I think we have somewhat of a window up until this right here, which is approximately 196, 7-ish, and maybe back up till 200. So that is clean 60 set up quite nicely with ABCD waves. We have a super clean level that we can play here. I absolutely love hammer candles on the last 60-minute candle before the open, so that's also a very nice confirmation. Pre-market's a bit more hectic. I'm not really the biggest fan of these scattered pre-markets that we can see here. I also don't like the fake break of the 8 AM clearing candle, but we did have a relatively okay sell-off on the 5-minute and a huge fake break on this candle. So had we not had this big of a fake break of a level this clean, which coincided with the 10, 20, the 200 and the 50, I would not even have considered an entry. But with this big of a fake break and, as I said, a level this solid with the moving averages, it was an easy entry, very nice VPA. Entry right here was nice. For stop loss, to be safe, I probably would have put it at low of day or below low of day, because the 200 MA was there, the 8 AM clearing candle's low was kinda there, and this little support was kinda there too, even though the actual support level was a bit higher. I think I would have gone a bit safer on this. Large wicks at the open, large wicks in pre-market. I just don't want to get wigged out around here and then have it run without me. Target, as I said, is approximately 194.91, which was kind of around here. I guess I also included ATR, which is approximately $3.4, which would have been 193.80-ish. Was it? I'm not sure why I placed a target that high. So maybe I used $5 as the starting ATR. Yeah, that probably would have made more sense. So that would have given me $4 approximately for 80% of the ATR. Yeah, which would have been somewhere around here, 194.91, front running at 195. So yeah, could have been a solid one. And I think for the risk to reward, I would have had a stop at approximately 190.50. Entry was at 191.35, 37, somewhere around there. So that would have been an 80-90 cent stop loss for a 3.5, $3.6 target. So that would have been approximately 4 hours. Not the best, but still a solid hit. Dell, very much like the higher low slash double bottom off of the 50, and now we're also above the moving averages and this little resistance area, so I like that very, very much. Based off the weekly, we could somewhat target this area for our next level of resistance. Daily, if I remember correctly, we've played this day out of the break of this right here. Now we have a very nice ABCD. The only thing not nice about it is that I don't like when we have what's this pattern called, the dark cloud cover, when we gap out and then get immediately back into a mini range on the daily. Now we have a confirmation candle off of the 9, so that's nice, but we probably have some intraday action on this day to deal with. As you can see on the 60, some very scattered highs and lows. That's not really pretty in my opinion. Don't really like going against these. Also have, what I wanted to play was this level approximately, but you can see that there's not really a clean level, or even the area is not that clean. So in this case I probably would have liked a very clean intraday pattern to set up in my direction and play that, but the 60 is just too hectic for me. Intraday was too ugly. I was definitely just FOMOing here, just taking whatever I could see or get my hands on. DraftKings, don't really like the way the weekly is set up. We're heading right into this resistance and support area, which is very, very ugly. We don't really have any weekly setup. We are 3 consecutive candles into this move already, although the daily is not really rushing. It's just having one up day, one down day, one up, one down, one up, inside candle, down day. So it's not really, it doesn't really have that much urgency to it, which is weird. As I said, we're at this level. Some recent daily confirmations for the weekly level as well. So definitely want to be careful about that. I do like this approximate top though that we could trade off of. I think we definitely could get some momentum, but I would be careful about holding it for long. Level is not the most exact, but we do have this approximate area from around here to here that I could play. And we had a breakout from that area, a range, and I love it when we have an area that I want to play, a level slash area. We break out from it, we have a range, and then we have a mini fake break of the breakout range. So this right here, we have a fake break of that, we touch my original level, and then we take off. It's a good entry right on the reclaim of the middle of the range, stop below the wick. And we did get a very nice few minute move. Could have entered right around here on the red to green move, set my stop loss here, and could have gotten quite a nice risk reward on a few scalps. Probably would not have held it long because of the weekly and daily resistance levels, but for a few minute scalp it was definitely a nice one. MO. So right now we're aggressively pulling back into the moving averages, although we are between the two. Nothing super concrete I can grab onto on the weekly. The daily chart does have 1, 2, 3, 4 consecutive candle extensions with one inside candle around here, so not the prettiest, but definitely not bad. We have around 1 candle distance back to the moving averages, so I can take advantage of that. I really like this last confirmation candle. There's a super nice level on the 60-minute chart, moving averages coinciding, not really acting as resistance. They would be if they were a bit higher. I would be a bit more concerned about those, like here on the 15-minute chart, but there's just too many good things on my side right now. We have a very mini range, half of which is just ghost candles. Fake break down below the level, below the very clear level, might I add. Fake breaks work amazingly well on these. So fake break, reclaim, I entered there, stop loss was here, and I just rode it back up to this range's highs, which was, I'm guessing, coinciding with 80% of the ATR somewhat, yeah. So 80%, 80, that's 60 cents approximately, 90 would be the target, so that's very pretty. We actually did end up going higher, but I just didn't really want to stretch it. That's what my strategy tells me is profitable, then that's what we're doing. Oxy, nicely got 3 candle extension, 1 inside candle, back onto the 200 MA, got some room back to align, so I'm a bit more long biased, although I'm not really the biggest fan of this wick. And we have some support resistance levels a bit below 90 MA. Very straight lines that I'm drawing here. Daily, I could somewhat read it as a higher low slash double bottom because it technically is, but the pattern is just really not nice. I usually like it to have a much nicer curve to it to play it. This is just basically a trend line that got broken and then another trend line that got broken. Yeah, it's just not really my favorite. Level is relatively okay, but it's an area, nothing approximate, no recent confirmation of it, so would like some very concrete intraday signals. SPY was basically chopping, so not really helping me out. And it did end up working very nicely, so it's a bit weird. But yeah, I would not take that for sure. I would have waited for something more substantial intraday, maybe like an ascending triangle or a pennant, which I could take the break of. Rivian, reverse ABCD off of the moving averages, but we're heading right back into support and resistance, and support is a bit lower, but we have to get through these areas to maybe get back to the bottom of this range. Daily, very nice descending triangle breakdown. Day 2, nice volume increase on day 1 though. I would guess that this pullback's insufficient for my style. 13.2 bucks, 11 point maybe $7. So that would be $1.50 move, and we got around 30 cents pullback. So that's a fifth, which is around 20%, which is not really enough for me. But after long bar candles like this, momentum does tend to be sustained, especially if we get a very nice pre-market pattern, which we did in Rivian in the form of a range, which got broken. I assume, since we didn't really have an upper wick first, so a green to red move where we could have played the bottom of the range, it immediately broke down, so probably would have been harder to catch. On these ones, I could maybe set a preset breakout limit order. So a preset stop around here and a breakdown limit order around here, so that if it just breaks down like this super fast, then I wouldn't be able to catch it manually, then that order would catch it for me. Could have done that, and since I'm mostly trading off of the pre-market, I'm using pre-market levels as target. And on long bars like these, after breakdowns, my backtest shows, my old backtest showed that approximately, or on average, we go 40% of an ATR below the candle's low, yesterday candle's low. So that would be around 32 cents below 11.65, so that would be around 11.30. I would not have gotten that, but I probably would have gotten some partials here and would have gotten stopped out once we got back up above PDC. Target. So we are still within the extremes around here, a bit of a peak out, but I'm not really liking that, even though the breakout of this high, retest of moving averages, and this high was quite okay. It wasn't super nice per se, but it was quite okay. Daily is now pulling back to the 90 MA. We do have a level there, but the confirmation is just definitely not enough. Why would I go long after something like this where we break down and we don't really have any other 60-minute confirmation? It just doesn't feel ready yet. After, you can see we have a very nice morning star candlestick pattern. After that, it's definitely much more ready. If you look at the 5-minute, it's just nothing is really telling me that we are gonna go now. We just have a few 1-minute confirmation candles, but how could I expect that to stop all this movement? What actually stopped it was a fake break of this area, then a retest of this area, and then having some nice confirmation there. And this is where I actually maybe could have taken the trade. But yeah, I am starting to realize this more, or maybe I have already realized it, and I'm just trying to implement it more and more, to think of price action movement through the lens of physics a bit. So like, if there's a force being this movement around here, then what's it take for a confirmation to stop all this downward movement? And this few candles without any extension, without any capitulation, is just definitely not enough. So we need, for a movement to be stopped, we need equal opposite movement, and that could be in the form of a very sharp singular candle on large volume that got super extended and people are realizing that it's way oversold. Or if we have a downtrend, then we need just like approximately the same amount of consolidation, or just some valid stuff that could make people say like, okay, this is a buy right now, because price doesn't seem to be pushing any further, and this point just wasn't it. But as I said, after the nice lengthy confirmation of this level that consisted of an hourly pattern, even, is just much more like it. VZ is still playing the breakout here, possibly a 3-bar play, although out of yesterday's or the preceding candles range, so not really the best one. Right now it's week 3. Daily is very nice ABCD pattern, still got the same super nice levels on the 60 minute that I can play, marked around here. 43.98 is the one that I ended up playing. So since we have some very solid level against us, that's why I'm guessing I took a partial around here. We had 3 consecutive candles on the 5-minute chart. 60 minute I'm guessing only 1, and 15 minute also had 3, so that was quite nice. We had a very large drop down here and then a confirmation candle, very large separation from the 9, so bit of an overreaction. Coming back to my previous example, why would anyone take it long here? Well, one, because we are already in an uptrend, and dips tend to get bought more often and more rapidly than compared to TGT when we were more in a downtrend. The other one is we have an acceleration, with people realizing that this price is not sustainable, trying to peak further, but we can't, and we have a nice separation from the average. So that is clean as well. But due to it being a bit more quick, these don't really tend to instigate many trends unless very substantial volume is being done at the ends, and the reclaim is done on increasing volume, which was lowering in VZ's case. So that's why I think a partial is very reasonable at VWAP and the 60-minute level. I even held more for longer because the weekly and the daily were set up very, very nicely. 80% of the ATR is approximately 64 cents, so that would have been 44.60-ish. That's, I think, what I was targeting here. But we didn't quite get there, and I just took all of my stuff out once we got back to break even. I think I could have even just raised my stop somewhere around here, would have been a lot more technical after this mini range that couldn't really gain VWAP, and we broke down from that. So yeah, that was VZ. Dell still the nice double bottom. I'm loving when double bottoms have inside candles on the second confirmation. We tend to have nice breaks after that. We're now above highs around here, still chopping within that daily range as previously. But yeah, it's just not really sure why I even documented this. This is not substantial. We are chopping within a very, very large range that I would define as highs and lows as this, or maybe even this, and these are just some mini peak outs. But we're still within that. There's nothing really telling me that we are gonna go now. And a mini 1-minute daily pattern such as this that lasted for approximately 20 minutes is just not gonna propel a move out of this range. So not worth watching. The XC PM weekly. Okay, so a very large bar. I'm guessing it was a gap down somewhere around there with some news below some key levels on the weekly. I don't really have any other stuff around here. What's this? 24th August. So let's just check that. So 24 August, somewhere around here. We broke down. We're somewhere around here now. We definitely do have some room back down to here, but this drop was just very, very rapid. In my opinion, I'm not the biggest fan of a longer term short, but shorter term we could definitely get some movement. It's the fourth consecutive candle into a move. We could definitely get some pop below here and play this window. But it does seem really risky. We do have some scattered support levels below us, so it's definitely really, really risky. What I wanted to play actually was the range play, so an extension on the 60 minute back down to the bottom of the range. Unfortunately, the top was very loosely defined, so that's a bit tough. We have 3 consecutive candles on the 60-minute chart. 5 minutes, not really getting an extension from the 9, so I'm not really in for that. 1, 2, 3, 4, 5 consecutive candles on the 15-minute chart. 1 minute also doesn't really have an extension. It just slowly started turning. It did end up working, but it didn't really meet my criteria. So yeah, this would be just a no-go for me. Intel breaking out of this daily range, although coming back into the weekly moving average 9 EMA and the daily 50 MA. So that's quite risky, although I absolutely love how we have this very clear level, which we haven't really been able to fully capture or claim yet. Every time we claimed it, we immediately got back up, and all we did was just place a wick above it. But right now is the first time we've actually claimed it, and now are resting on top of it with moving average support. So that's very, very clean, and I love it for a short. We have a very tight range formed right on it with a higher low. I absolutely love it. I probably would have initiated a position even earlier once we claimed this PDC level stop loss around here. Maybe would have gotten stopped out at the first minute, but it's just a very easy no-brainer re-entry around here. Stop loss is exactly the same. Maybe would have used below the range right now a bit, below this wick. It's just super easy. It's a very nice setup. ATR is 1.2. Maybe if we have a nice intraday RVOL, which unfortunately I can't really see, I could have gone for the full ATR, which would have been counting from pre-market low 2380-ish. So yeah, that would have been a good target in my opinion. The setup was just supreme. Could have even risked 2 hours on it, maybe 1 hour on the pre-market entry and then a second one after the open. The pre-market high is something we also had to deal with, so could have maybe just ended at the break of that. So had I not had my pre-market entry, I could enter here for 1 hour, and once we break pre-market high, I could have entered here for another hour and tightened my stop loss to below PDC, because after that I think we're just gonna go. So I could have captured that trade that way. Probably would not have taken any partials. 50 MA was approximately at 2310-ish, which we cut through rather easily. 9 MA was at the previous high, so basically the same price. Didn't really have scattered resistance ahead of us, which I liked. This was approximately 2310 as well, 2310.20. And whenever there isn't really scattered resistance, only like one resistance level, and there's a super clean setup, then I don't really like to partial if we cut through it like butter. We don't provide any other signals.